Yeah, I don't watch this too much, but I heard they're
All right, Quasar Markets Live. We got him right here, Mike McGlone. He is literally the senior commodity strategist at Bloomberg Intelligence, Bloomberg, and we love it. We're glad to be. This is awesome stuff, Mike. And listen, let's be real honest. Everybody has been talking about one commodity, and what is it? I think it's a cocoa, or is it? Oh, yeah, it's oil, obviously, with the war here now. So, talk to us a little bit about what you're seeing in the markets, and I'll let you talk a little bit here before we pull the charts up. I think.
Well, first and foremost, Steve, I appreciate how we started last week where you said I was hot and I needed to get my face ripped off, and I did. I did not think we'd close the Strait of Hormuz. The fact that it's closed for the first time in history right now is obviously the reason crude oil's up. Question is, how long does that last? And let's think about the motivations here for our president who made this decision to potentially end what was essentially a 47-year period of war and animosity of Iran towards U.S. I mean, I was pumping gas in 1979. I remember that revolution when the price went over $1 and we had to start charging in half gallons. So there's somewhat justification here, but the key thing is, did he calculate properly how this is going to look by midterms? I fully expect so, and I fully expect that. Let's not underestimate U.S. military. Now, I think it's a bit of a faux pas that the strait is closed, but we'll see how things look by Monday morning. And I want to show you a few charts on that initially to start off. So first of all, right now, we're seeing pretty significant short covering in crude oil. I show you this one. I show you here. This is the annual chart of WTI crude oil. We're $91 a barrel, massive pump. Obviously, look at last year was down. We've been downward for a while. That's the front contract. The contract for December, which will be front in October, when the elections matter, is 68. I fully expect this big red, big green to be a red by the end of the year. And here's the reason why. That's just what natural gas did. Natural gas is a big red on the year. Now, the contract that'll be front by the time the elections and by the time we're in the midterms is up. And that's the Jan contract. But this is crude oil. And the key thing to think about here is, bottom line is, how is this different from the past pumps? Now, this has been a bear market. The best way to cleanse a bear market and restart a bear market is to pump prices up. We did it for good reason, but this is the bottom line I want to show you on this chart is the U.S. is on pace to be a net exporter of almost 4 million barrels a day of crude oil and liquid fuels. Now, back in 2008 or so, when crude oil peaked at 145, we were a net importer closer to 11 million barrels a day. So you see, part of what's emboldening Mr. President and Mr. Trump is once the dust settles from this fog of war, and we can't not underestimate the U.S. military's ability to just obliterate enemies when they really want to with more and more lethal weapons. Once the dust settles, crude oil, I think, was going to end up with a red candle on the year. And what's the motivation, bottom line, for the world's leader of the most significant producer and net exporter of crude oil and natural gas? For prices to go lower. That's just a substantial statement. It's rare to say that. And I'll show you one key reason what emboldens me to say that. And just look at the facts of what's happening in crude oil. So there's been a lot of headlines how the average gasoline price has jumped above $3 a gallon in this country. Sure, it's jumped up. That's the same price as Q1 2008. So we're almost 20 years of unchanged. Over the same time period, CPI is up 50%. But the key fact is what's happening is the U.S. production of crude oil and liquid fuels has increased 170%. At the same time, the crude oil consumption of crude oil in the U.S. is flat, just like the price. So when we get through this period, I fully expect a collapse in crude oil. Something really bad has happened for it to go higher, and something really bad has already happened. The strait is closed. Now, if you told me that a week ago, and prices are up. If you told me a week ago, I would have said, no, it's very unlikely it's going to be closed. So to me, that's the key thing to be thinking about as we walk into this weekend. And I'm happy to go from there on. But in the meantime, we've had some data come out today, a little bit weaker than expected, but it's old data. It was during a pretty significant winter storm. The key thing that people aren't talking about is retail sales are running negatives versus CPI. This is the second month in a year. I track the annual basis. CPI running negative, that's not a good sign. And it's also happening despite the greatest wealth effect in history. So I'll end with my key theme for this year is I fully expect this massive volatility we're seeing in energy, most notably precious metals, and in cryptos, collapsing cryptos, to trickle over the stock market. My key theme for this year remains the same. NASDAQ and S&P 500 volatility, 180-day volatility running near 10 years lows will go up this year, which is going to be all that matters. So right now, a key thing I'm worried about is the trickle down of this volatility to the stock market, which has not happened yet. Right now, this is a blip.
Yeah, and when you look at oil and gas, I mean, we're still in backwardation. We're not in contango yet. And so is this a blip? Is this a 1 month blip? What are we looking at here? I think people are starting to get nervous. And the president today said he doesn't care if prices go up. We've had several people, his friends, also say the same thing, like, hey, it's okay for a month or two for the prices to go up if we're trying to create democracy all over the world. Understandable. So to me right now, we're still in backwardation.
Well, there's a key thing I really have enjoyed about this period of backwardation is people are misunderstanding. There's a concept called normal backwardation. Written, actually, Keynes was one of the first people who brought it out and pointed out producers oftentimes sell the backs, which we call the forward contracts, the backs, to lock in profits because it's a prudent thing to do when you're a producer. And it's much better when they're contained. You can sell at higher prices. But this is, I just pulled up the strip of crude oil futures. They're trading right now. This is April. The major one is December. It usually has pretty high open interest. It's among the highest. It's trading 68. That's the one I expect to be below 50 by the end of the year. You look at April 27 next year, it's at 66. That's very, very rare. So people in the past would say backwardation is a sign of bullishness. I'm like, well, it's been in backwardation since Russia invaded Ukraine. Why? Because of that chart I showed you earlier. This is U.S. producers. That is a massive, just straight up bull market. They're bringing in more supply. And the key question we have to ask ourselves, when prices pump like this, and they can sell forward a year, $10 above their average production cost, which is $55 a barrel in this country. You as a producer, what are you going to do? You as a banker, or as one who's actually providing credits for the producers, what are you going to ask your producers to do? Well, it's prudent to sell forward at least some of that. To me, that's what's happening, and bring on this supply. And this is what I think Mr. Trump gets, is we have a major glut of energy, not just energy, grains, corn, soybeans, and wheat. We have to export these things. And if we don't, as I point out here, this is our exports. We have to export 4 million barrels a day. Oh, we got a problem. Prices will go down. So that to me is what the game plan is here. And the bottom line is, by the time we get to Monday, we'll see how things are going. I mean, it's just, the fog of war. I'm not a strategist in terms of war, but I just don't underestimate the U.S. military. One thing, there's so many things going on there we don't know about until later. And the key thing I'm also hearing about, a lot of drones are being taken out by lasers now.
Okay, I like that. And full disclosure, I'm also short oil here, and I'm going to hold my short over the weekend. I'm not too scared. But when I look at this, when I look at the forward price curve of oil and gas, and I also have to look at heating oil, right? You got to look at nat gas and all the other pieces of the oil, because a barrel, and to me, it's all about the crack spread and what they get out of it. But I am concerned, Mike, about as Iran and the Iranian drones are now hitting refineries, and not just in our, their nearby neighbors, but they're also looking at UAE and Abu Dhabi and the refineries in Saudi Arabia. I am concerned that this glut of oil might get held up, and it might hurt gasoline prices even worse than actual oil prices.
Yeah, that's a little, to me, it's more the macro. I agree with you. But the key thing to think about here is some of these, what's the propensity for a typical Iranian drone to hit an enemy target next week? Now, they've reached out and understand they've attacked 12 nations. What a good way to get people pissed off. And I hear Iran and China, Russia and China are still, somewhat allies. But just to look at the historical context of what's happened here. This is so significant. What this whole period of the bear market for crude oil, which I point out, this peak came at 1:30 when Russia invaded Ukraine. On the back of the unlimited friendship for President Xi and President Putin. So how is that working out for you? First of all, they lost allies in Syria. Venezuela just lost Iran. Mr. Trump and Mr. Rubio has pointed out Cuba is next. The average bond yield in China has dropped to 1.8% from 3%. That's pretty severe deflation. And they've had to pick up their fiscal and monetary stimulus to levels that are many times that you see in the rest of the world in the U.S. So that's a declining economy and a normal reversion for expanding too fast. And they made the big mistake of cozying up to the wrong country. The key question is, when you can take out leaders like President Trump has done, like this instantly, and made Mr. Putin kind of look like an idiot for being in a 4-year war for Mr. Trump did in Venezuela, and took out the leadership in a couple of days. This is getting quite significant, I think, and also the key thing I look at is this is the part of the signs of the beginning and the end for that geopolitical bid for gold. And gold is one of the worst performers. Silver has been one of the worst performers on the month since this happened. Gold's down, what, 4%? Yeah. To me, this is a sign of peak for the gold bull that I've been bullish forever and got off the horse a little bit too early. And things like silver are collapsing. But
okay, so you're done with gold and silver. You're done with gold and silver. I love it. Okay, all right.
So to just put that in context, I said and did the same thing last year with cryptos. I was early. Looked like an idiot for a while, look like less of an idiot now. Fully expect to look like an idiot in gold and silver for a while. I still think 100 in silver is a prudent short. I fully expect it back to 50. Shorting gold's a little different. It's like shorting crude oil is a little different, but now, as you mentioned, might be when the market tells you to short it, you're supposed to. But I still think the best, most significant, most important place to be this year is the simplicity of U.S. Treasuries, partly because when you expect volatility to increase in the stock market from about a 10-year low, you got to just be sitting back and waiting for opportunities. So now we've had a great opportunity, as you just saw, maybe sell a little crude or at least short some of that. Now you have to do that safe, cautiously. We've had some great opportunities to short Bitcoin initially at 94 at the beginning of the year, and just recently it bumped up to 74. That's a bear market. You're supposed to sell rallies in big bear markets. We've had a chance to sell copper above 6. Right now it's 582. We've had a chance to sell silver above 100. And one key thing is going to make me wrong on all those ideas if stock market stays low for a long time. If it just pops up a little bit, game on.
Yeah, I'm gandering over at my screens here. 4.115 now on the 10-year, and the TLT 88.84 here. Are you still concerned that you still like treasuries here?
Oh, yeah. To me, today was another buy signal for TLT. It reminded me very much of 2008. I remember in 2008, I was bearish everything and long gold and bonds and short stocks via puts. But to me, the signal was in 2008, the first time the price of the average gasoline, I think I showed you, Gavin price of gasoline here. It popped right here. This was $4 a gallon. Now I'm just showing the rate of change. When it went to $4 a gallon, that was your signal. That was in July. That was your signal. Oh, this is going to crush the economy. Now it's different now, but here we are down at 3, and people are worried about. Now I show this is just the change from there, but that was a signal that things were going to get bad. Same things happened again. Didn't have a war then, but we have a pretty significant war going on in the Middle East. Have this pump in energy prices, which I think will be very short term. And we have the number one thing to cause a recession in this country, and that's volatility. The standard, I can just pull that up, and here's TLT, but I'll just pull that up in a second. NASDAQ volatility, GP, 180-day volatility is running the lowest, and let's just probably show that. It's running the lowest in about almost a decade. So to me, this is just one of those things, stick with the discipline of the trade. The cryptos are a bear market, so there's how low it is. Let's just go back to 2018, 15%. Question I want to ask you is, do you want to be short the market here?
No.
I mean volatility.
No. Yeah. I think that VIX is.
Looks like I lost you, Stephen. Hope you can come back.
Did you lose me? Are you there? Mike, are you here? I can hear you clearly.
I think I lost you for a second.
I can hear you.
Yeah. So the key thing is, this is just a chart of 180-day volatility on the NASDAQ. It's at 15%. That's the lowest since 2018. The key question I ask you as a trader, do you want to be short any market here or any volatility here? And that's the bottom line I say is wait for that to revert. I don't know where it's going to happen. And then look to buy risk assets. The key thing is cryptos that are riskiest, and they've already rolled over.
Yeah. And, when I look at this market here, the FDX is getting smashed right here in the markets, 354.84. So I totally understand. But people don't. I guess we can ask our friend Nathan Dean about politics coming come November. But it just feels like to me that markets seem to be heading in the wrong direction. I just don't feel like people are watching as closely with the stock market.
Stephen, I think we've had some delays there.
Might be a Twitter problem here. I can hear you.
Yeah, I hear and see you now. I've lightened up some of my stuff I have on the screen, but I'm in a Bloomberg office. I should have the best connection possible.
Well, it's so funny because the when I got my own lines put in my and here in the studio, I mean I have fiber all everywhere, so I try to make
Yeah.
that. But I think everybody's just watching oil, Mike. You know, the markets are burning up with data around the world. Let me get right back to it, Mike, and ask you before I let you go. You know, when you look at the markets over the weekend, I want to stay short oil. I'm not scared here, and it seems that like I'm expecting some tweet. Here we go. Energy Secretary Wright calls to reopen Indian Point nuclear power plant. Nuclear power coming on. I expect a lot of oil companies that are sitting on a glut of it to just start dumping their oil over the weekends.
Oh, not so only that. The key thing is they're selling forward. I mean, what's the prudent
Yeah.
thing to do? Yeah, I mean they got to be. If you're running a business and your number one source of revenue just is you can hedge it a little bit and you don't hedge, that's silly. So that to me is a key thing. And what does that do? They bring on more supply, which means prices will go lower. So to me, this is a catalyst for lower oil. It's just a question of where it ends and where it
Mike,
peaks.
for the watcher right now, the people versus watching. Can you explain what that means by dumping the forward contracts here?
They're not so much dumping is they're hedging.
Right.
So I'll show you that this has been the case for years now, and it's what people haven't. I think some of the old guard people haven't understand that the answers are the same, but the questions have changed, and that's where I want to show you is that front contract. April 26 is 90. On a normal situation, you go out a year to April 27, it should be about 8% higher. Now, first of all, the cost of carry is interest rates, 3 to 5%. And then there's cost of holding oil. So it's typically between 8 and 10%. This contract should be 8 to 10% higher. And the main reason it's not is because those producers in the US who are massive net exporters now, not just the US, around the world, take this chance, sell forward, and that enhances and helps manage their business. So that's part of the reason they're lower. It's called normal backwardation. And it's part of the reason also when it's good, I think, to be short. And then you can ride down the curve as we go every time. So when April expires, we're going to go down to May, which is 87, then June is 81. You see what the problem is? That number is going to tick down, particularly when things get resolved in the Middle East.
I agree, and I think that's exactly why I think I'm going to stay short. Mike McGlone, as always, we appreciate your time. I know it's very precious. We appreciate you and Bloomberg and giving us some insights weekly here on Fridays. I'm going to do something. I'm going to go take a vacation. I haven't done that very long, Mike. And so next week, not so much. But I look forward to seeing you in a couple of weeks and catching up. And hopefully we'll see oil prices slip back down and gasoline prices giving everybody a break here.
Well, it's a question of time. The key point is the higher they stay elevated, the more it enhances the ability for the Western producers to bring on some more supply and pressure prices lower. And I wish you a nice vacation. I wish everybody a safe weekend. This is going to be quite interesting next week, and I fully expect that we're going to see the Hormuz open and crude oil going lower. Now, if it's higher from here, that's a problem.
Okay, there you heard it from Mike McGlone himself. I love it. I'll see you in a few weeks here, Mike.
Thank you, Stephen.